Channel, welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel, and while you're at it, smash that like button. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want to follow me when I'm not on YouTube, get down to the description box. Click on that Richard Fain Millionaire Mentor Instagram link and give me a follow. And then send me a DM to let me know you're rocking with me so that I can say thank you. I appreciate you guys a lot. Y'all have been wonderful to me over my last 4.5 years doing this whole YouTube thing full time. And I've seen my YouTube channel go from, a few thousand subscribers all the way up to over 700,000 subscribers. So y'all know I'm very grateful. And without you guys, I wouldn't have this opportunity on this platform to be able to reach and help a lot of people. And I appreciate that. And I will never forget that. So definitely anything I can do to help get you to your pot of gold at the end of the rainbow is something that I'm willing to do. And that's why I'm on here every day, a couple times a day on this YouTube channel, doing these live streams, the edited content. I'd love to do more on other social media platforms, but of course, you know how that goes. Their algorithms are a little bit different than YouTube. So you got to figure out the algorithm, and that's what you have to put content that the algorithm likes and will spread out to more people. But, we'll work on that. That's not my main priority right now. My main priority is the YouTube channel. And it's going great, and I'm loving it. I love every minute of being on here with you guys, sharing this financial information. And we're going to talk about a lot today because, of course, we had the CPI inflation report that came out this morning. And it's a good report. We also had the Federal Reserve Chairman, Jerome Powell, on Capitol Hill on Tuesday and Wednesday. So we're going to talk about that a little bit. And how does the CPI inflation report and the Fed chair being on Capitol Hill give us an opportunity for stocks and crypto to skyrocket? That's the whole thing. I mean, to make us wealthy. That's why I'm here. I'm here to help you get wealthy. Let's not get it twisted. I am only here to help you get wealthy. Whatever definition you put on wealth, I'm here to help you get there through these videos. All you got to do is execute, right? That's your part of this partnership. My part of the partnership is giving you information that can help you get to the pot of gold at the end of the rainbow. Your part of the relationship is you got to execute. Guys, I'm telling you, if you can't see the writing on the wall, have you looked at the S&P 500 index? This thing is almost 5,700 points. I just told y'all 3, 4, 5 days ago it was 55. Now it's almost 5,700 points. This thing might be 6,500 points, man, before the end of the year, guys. And why miss the opportunity to get rich? Why miss it when it's right there for you to take? If you would just execute. If you just execute, it's there for the taking. And it's only going to get better because we got interest rate cuts. 3 of them, hopefully. And I think today's inflation report has helped our cause, guys. And we're going to talk about that too. But before we do, y'all know I got to get a little bit of my business out of the way. Remember, this is a partnership. I give you information. Of course, you execute as well as you help me in the area of doing what I need to do. One of them is my website, www.richardfain.net. Second link down in the description box. Go check out the website, guys. Over 200,000 of you guys have already done that. So thank you very much. I'm talking about a lot of you guys have made a decision to make an investment in yourself and purchase the 10 digital products that I have on the website. And they're 10 digital products for a reason, guys. I handpicked them. See, I'm only going to put on that website things that I handpick and I believe will help you get to wealth. I'm not going to fill it up with a bunch of products and things like that I don't believe in just to have it on there. I'm not going to do that. I'm only going to put things on. I want it to be clean. I want it to be concise. I want it to be straight to the point, no fluff. It's a beautiful website, but it got 10 digital products on there that I'm telling you guys, if you would utilize them, they're going to help you. They will help you, but you got to utilize them. You got to purchase them and utilize them. Follow the blueprint they tell you to follow and you'll be successful, right? You will be, but you got to follow the blueprint and execute. So get over to the website, www.richardfain.net. Second link down in the description box. While you're there, consider joining the private mentorship club. Again, we got over 700 people. It's growing every day. People are loving it. I love it. I love being in there, and I know other people love being in there because they tell me, and they put it in the community chat. They direct message me. I got at least 75 open conversations right now going through direct chat with me, using me as a mentor. And that's the whole point of this thing, guys, is for you to be able to be in a community of people who are mentoring each other. We all mentor each other, right? I'm the creator of the community, but you got over 700 people in there that are mentors in some shape, form, or fashion, right? They're mentors. They're helping one another. And that's what it's all about, building this wealth, guys. You need help. Why not get yourself around people who want to do and go where you want to go? Get yourself over to the private mentorship club through the website. You'll see a membership button or you'll see a join button, depending upon what device you use. Click on it, get yourself over to the Patreon membership club and sign up and get going and immerse yourself into this community. Please do that to yourself or you're gonna miss this opportunity, man. I'm gonna tell you every day. So if you don't wanna hear about the opportunity, don't plug into my YouTube channel. That's all we talk about. I ain't finna talk about no gossip. I ain't finna talk about no celebrities. I ain't finna talk about no athletes. I ain't finna talk about no rappers. I ain't finna talk about no politicians. None of that. Only thing I'm talking about on this channel is how do you get rich? How to build wealth. That's it. So if you're here and you stumbled on my channel thinking you're finna hear something about gossip and pop culture and all that old stuff, we ain't doing none of that here. It's all about getting that bag, getting to that pot of gold at the end of the rainbow. Last thing, and then we're gonna move on. Moomoo, my self-directed brokerage app that I'm gonna use over the next 10 years to quadruple the net worth. The link is down in the description box. The good folks at Moomoo have an incredible offer for you guys. They're gonna give you up to 15 free stocks when you try out their brokerage platform, right? When you try out the brokerage platform, the brokerage app, they're gonna give you up to 15 free stocks of publicly traded companies that are listed on our stock exchanges. New York Stock Exchange, Chicago Stock Exchange, right? Some of these companies will be in the S&P 500. Some of them might be in the Dow. Some of them might be in the NASDAQ. Have you been watching those three indices? Have you been keeping up with them? I just told you the S&P 500 is a hair under 5,700 points. At the beginning of the year, guys, it wasn't even 5,000. In 6 months, it has grown 700 points. Headed to 6,000. It'll probably be 6,000 before August. But sometime before the Fed makes its first rate cut in September, guys, the S&P will be 6,000 points. I'm telling you. So please do not miss out on this opportunity. But you need a brokerage account, right? You need a brokerage account in order to be able to execute. And that's where the good folks at Moomoo come in. My preferred brokerage app of choice. There are many out there, but I prefer Moomoo. They're going to give you up to 15 free stocks. Put $100 in there, you get 5. 5 free publicly traded companies. You're already building wealth right there. You ain't made one trade. You haven't bought one stock. You haven't bought one ETF, and you already got wealth. You've already increased your net worth by putting $100 in your brokerage account. Boom, instant net worth growth. Now, if you put 1,000 in there, now you got 15 free stocks, publicly traded companies on our stock exchanges. Now you've instantly increased your net worth with these 15 free stocks, publicly traded companies. Each stock can be anywhere value from $2 all the way up to $2,000. It's a random system that they use on the Moomoo side, randomly pick these stocks, but value can be from $2 all the way up to 2,000, guys. That's an incredible way to instantly build your wealth without you doing anything other than executing and putting $100 or $1,000 in your new brokerage account. Now you're in position. I talk about being in position a lot on this channel because I think in order to build wealth, matter of fact, in order to be great at anything, you got to put yourself in position. I don't care what you do in this life. If you want to be great, you got to put yourself in the right position, period. Put yourself in the right position, guys. Get yourself ready to build this wealth because I'm telling you, somebody gonna build wealth, whether you do it or not. I'm one of them. I'm gonna build wealth no matter one person watching this YouTube channel a day. Now, if I start the live stream and you got one person in here, me and that one person, go build wealth. Ain't nothing gonna stop me from getting mine. I'm gonna tell you that right now. Nothing. Nothing gonna stop me. Nothing is gonna stop me from getting my fair share over these next 10 years of this incredible wealth transfer that's happening. It's already happening, guys, but I've been telling y'all this since January. I've been telling you guys, listen, man, if you watch my channel, you gotta say to yourself, dog, look, I may not like this guy, but I gotta admit, this guy has been telling me this since January of 2024, and everything he said is coming true. Not that because I'm some expert, you just gotta follow this endless, continuous bull market. I keep telling you, this bull market doesn't stop. It's continuous. For 140 years. It's been going up for 140 years, guys. Whether you want to believe that or not, that's on you. I'm telling you, it's a continuous bull market. It's been going up for 140 years. Well, what about the setbacks? What about the corrections? Well, they're just inside of the continuous bull market. Yes, there are bear market corrections inside of a continuous bull market, though. It never stops. How can you say that, Richard? Have you ever noticed when there is a bear market correction, what happens directly after that correction is settled itself? We go to all-time highs every time. Go back 140 years, guys. There's not been one time in 140 years that the stock market hasn't come back bigger, better, and stronger after a period of correction. Just telling you. So if you want the Moomoo offer, guys, get down in the description box. Take advantage of those 15 free stocks. Put yourself in position and be ready to execute to build wealth. If you don't know how to use the Moomoo brokerage app, send me an email through my website, www.richardfain.net. Second link down in the description box, the website address. Just send me an email and say, Richard, I've opened my account. I've opened my Moomoo account. I've funded it. I don't know how to use this app, but I'm ready. I'm in position now. I want to execute. I want to build wealth, but I need your help. And I'm going to say, no problem. Here are 2 tutorial videos going to walk you through everything you need to know, basic information on the Moomoo app, how to operate it. And then behind that, here are 2 more videos that are going to outline all the investments that Richard Fain is buying. And I got to tell you guys, the net worth is going up fast. I'm telling you. Because I've been at this thing. I've been preaching this thing, this financial gospel to you guys since October of last year about the Magnificent Seven. I told y'all about the Magnificent Seven October of last year. I was telling y'all about the Magnificent Seven then. And look what it's done. Look what Apple is doing. Had you been in the Magnificent Seven when I told you to get in, look what Apple is doing. Look what Meta is doing. Look what Microsoft is doing. I ain't gonna even mention the video. Y'all already know what they're doing. 150+% return year to date, killing it. Killing it. But all I'm telling you is if you would pay attention, listen, and execute, you would be ahead of the game right now. I don't understand the point of listening and not execute nothing. You gotta execute, right? But you need that brokerage account. So get down in the description box, get that Moomoo account opened, get them 15 free stocks when you put 1,000 in, get them 5 free stocks when you put $100 in, and then send me an email through the website, and I'm gonna send you the information you need to put yourself in position. The only reason I'm here, guys, is to help you build wealth. No other reason. I told you. You see, I don't have no chat running. You see, ain't no chat going on my live streams, and you won't see no more chats. It's a distraction. I want people in here, only in here that want to build wealth. All the rest of y'all that was in the chat, just whatever y'all was doing, I didn't need that no more because it's a distraction. Like I said, I'd rather have 3 people in here who are serious about building wealth that I talk to every day. I'm okay with that. You know why I'm okay with it? Because I know how to make money. YouTube is not the only way I make money, guys. I got a lot of money invested in the stock market. I make a lot of money in the stock market. Why? Because I execute. I make a lot of money in the stock market. Because I execute. Don't get me wrong, YouTube is a very good form of income. But it's not my only way I take care of myself. Right? So all I'm trying to get you to do is figure that out too. See, your primary job shouldn't be the only way you take care of yourself. YouTube is my primary job. But it's not the only way I take care of myself. If YouTube said, hey, Richard, we don't want you on here anymore, I'd feel sad. It would hurt the pocketbook. But I'd survive because I know how to do other things to create money. And that's what I'm trying to get you to understand. Don't let your job be the only way you create money. Create money through the stock market. Create money through real estate investing. Right? Create money through a side hustle or 2. But you got to be ahead of the game. You got to make this money and you got to multiply it. And what a wonderful way to multiply it than through paper assets, right? Let's dive into this CPI inflation report for June. Let's dive right onto that thing because y'all know that's the first thing we got to talk about. First thing we want to talk about real quick is the Fed. Let's go in order. Let's talk about the Fed. Let's talk about inflation. Let's talk about stocks and crypto, and then we'll finish this thing off. Let's start in order. So, 2-day meeting on Capitol Hill, Fed Chair Jerome Powell. So he does this semi-annually. He goes to Capitol Hill, he meets with the Senate, he meets with the House, which is the House of Representatives and the Senate make up Congress, right? They make up Congress. Well, Richard, why in the world is he going up there? They don't have control over the Federal Reserve. It's its own body. They go up there because Congress does have oversight of the Federal Reserve. They don't make the Federal Reserve do anything. They don't control the Federal Reserve. But the Federal Reserve they go up to Capitol Hill. The chairman goes to Capitol Hill twice a year. And he has to give them a report on what's going on. What's going on with inflation? What's going on with interest rates? What's going on with banks? What's going on with the payment systems? What's going on in the job market? They have to talk about that stuff. So that's what he did for 2 days. And one of the things he said, and this is the only thing I'm going to cover with the Fed, one of the things he said in that meeting was he and the FOMC have seen great progress with inflation coming down. And if they see more progress, yes, they're more than willing to cut rates. That's all I needed to hear. I'm paraphrasing now. You go back and look at the whole manuscript yourself if you want to, but I'm paraphrasing. That's basically what he said. That's what he was telling Congress. So for me, I'm thinking, okay, great. That's what I wanted to hear. That's what the market wants to hear. So guess what happened then on Tuesday? Start seeing the market move a little bit. S&P all-time high. NASDAQ all-time high. Wednesday, same thing. Tesla. Look at what's going on with Tesla, guys. Tesla was buried basically at the bottom of the basement. And now look at it. Last time I looked at it, $269 a share. Come on, guys. So what I'm telling you is it's moving. It's starting to move. So the Fed this week put more optimism back in the stock market. That's all the Fed chair had to say was, yes, we see progress. Yes, that progress, keep seeing that kind of progress. Yes, we're open to cutting these rates. That's all the market needed them to say. So that's all we're going to talk about on the Fed, right? The Fed is ready and prepared. They're ready and prepared to cut these rates 3 times this year. And I'm going to tell you why here in a second, but 3 times. That's what I believe. Three rate cuts. I think you get a rate cut in September. You're going to get a rate cut in October, and you're going to get a rate cut in December. Yep. That'd be your Christmas present for all of y'all that celebrate Christmas. If you don't celebrate it, then guess what? Birthday present. Something, right? You're going to get 3. I think. Now, I'm got no crystal ball, but I'm just telling you, I believe the rate cuts will be 3. And here's why. A couple things are starting to happen. One, you're starting to see a softening. You're starting to see a softening in the labor market. If anybody paid attention to the labor report, you'll notice that for the 3rd month in a row, unemployment is going up. Guys, that's not good. If anybody has paid attention to GDP over the first 2 quarters, if you're paying attention, you'll know GDP is well under 2%. First quarter, it was 1.4%. Second quarter, 1.5%. Last year, the total GDP last year was about 3.4%. So you got a labor market that's softening. You have GDP, which is our economy, softening. Economy softening, labor market softening is not good. How does the Fed stop that from happening? They lower rates and they stimulate the economy. See, I'm telling you guys, it's on our side if you just pay attention. If you just pay attention, the writing is on the wall. Softening labor market, softening economy. Plus, today you get for the 3rd month in a row, inflation coming down. Those 3 things right there, guys, spells interest rates come down. I'm just telling you. So let's go over this report real quick. Since we talked about the Fed and set that up, why I believe you get 3 rate cuts from the Fed. Those 3 rate cuts help you get rich. Those 3 rate cuts will help you build wealth if you put yourself in position. Now, if you want to be over here and be like, oh, I'm going to go over here and drink me a pina colada, I don't believe any of that, then you're going to just be a guy drinking pina colada and be broke. I recommend you pay attention if you want to build wealth. The Fed is telling you what's getting ready to happen. The labor market is telling you what's getting ready to happen. Right? The economy right now is telling you what's getting ready to happen. And the Fed got no choice but to save us. And how do they save us? Lowering those interest rates to stimulate our economy. They're going to have to do that. That's the only way they save us from a recession, guys. If they do not lower these rates, we're going into a recession. The writing is on the wall. Okay, so let's move on to the inflation report. Inflation falls 0.1% in June from prior month, helping case for lower rates. See, everything I'm telling you guys is directing you towards lower rates. It has to happen. There ain't no, oh, they may not do it. No, they're going to do it. I don't care what they're going to do it. And you know who else know they're going to do it? Investors. That's why you see the stock market doing what it's doing. Investors know they got no other choice but to lower these rates. They know it, guys. You got to follow the 1%. The 1% know the Fed has no choice but to lower these rates right now. They got no other choice. So what are they doing? They're positioning themselves. Have you looked at U.S. Treasuries? You see what's happening in the U.S. Treasuries? They're going down. What does that tell you guys when U.S. Treasuries go down? I tell you this all the time. When you see U.S. Treasuries in the red, that tells you investors are doing what? They're going to the stock market. When you see U.S. Treasuries in red and falling, that means investors are headed back to the stock market. Period. That's what's happening. That's why every day you see a S&P 500 that hits an all-time high. Now you got the S&P 500 over 5,600 points, headed to 5,700. You got the NASDAQ, 20,000 points, coming to be 20,000 at least. It's coming. It's coming. It's coming. Just saying, you can either position yourself or not. That's on you, but I'm telling you it's coming. So Fed will help you get rich by lowering interest rates if you in position. That's how the Fed helps you get rich. They're going to lower these interest rates and put more opportunity, more money supply into the economy. When that more money supply comes into the economy, somebody going to take that money supply and start buying assets, which does what? Increase demand on assets. And when assets get increase in demand, what happens to asset prices? They go up. You just got to follow the steps, guys. It's it. I'm giving you the steps. You have to follow the steps. See, when interest rates come down, that's a money supplier. That's a new supply of money being introduced to our economy through lending, through borrowing. Everybody don't borrow money to make other people wealthy. Everybody don't borrow money and go buy stuff to make other people wealthy. A lot of people borrow money and put that money in assets. Yeah, they do. And that's going to drive up assets because it's going to be more demand. So watch out for those lower interest rates. Let's keep moving on in this inflation report. The monthly inflation rate dipped in June for the first time in more than 4 years, providing further cover for the Federal Reserve to start lowering interest rates later this year. The Consumer Price Index, aka CPI, a broad measure of costs and goods and services across the United States economy, declined 0.1% for May, putting the 12-month rate at 3%, around its lowest level in more than 3 years. The Labor Department reported Thursday. The all items index rate fell from 3.3 in May when it was flat on a monthly basis. So I'm just telling you guys what's getting ready to happen, and we got to be ready for this. We got to be ready for it, right? We got to be ready. We got to be in position. This was the first time since May 2020 that the monthly rate showed a decrease, excluding volatile food and energy costs. So we see a decrease in inflation. And it's continuing to come down, guys. Now, I think these guys meant to say, in the article I'm reading here, they're saying May, but it has to be June. So they got May in here, but it's June. Because what we're looking at right now is actually the June CPI inflation report. So while Fed policymakers target 2% annually, the June CPI reports provide further ammunition that the trend in prices is headed into the right direction. The CPI peaked at 9% in June of 2022, prompting the Fed to respond with a flurry of interest rate hikes that concluded in July 2023. Since then, the central bank has held its benchmark borrowing rate at 5.25, between 5.25 and 5.5. So that's the Fed funds rate right now. So if we're looking at what's happening right now in June, And I know I mentioned May earlier, but that was a mistake on my part. It's actually June. These numbers are the June numbers. So in June, let's talk about that. So it says in June, it declined 0.1%, putting the 12-month rate at 3%. So that's the headline rate, right? The headline rate is 3%, which is amazing, which is good. At the lowest level in more than 3 years. The all items index rate fell to 3.3 in May when it was, I keep saying May, I meant to say June, when it was flat on a monthly basis. Excluding volatile food and energy costs, so-called core CPI increased 0.1 monthly and 3.3 from a year ago compared with respective forecasts of 0.2 and 3.4. So that means we beat the market on core because the market felt like core would be June core would be 3.4 year over year, but it came in 3.3 year over year, which is good. We beat the market expectations. Month over month, 0.1 we came in. They thought we would come in 0.2. So we beat that one as well. So that's good news. The annual increase for the core rate was the smallest since April 2021. So in all indications, headline and core, we did well. We did well in headline and we did well in core. So that's good. That shows inflation is coming down for June. So it came down in May, it came down in April, and it came down in June, which is great. So a 3.8% slide in gasoline prices held back inflation for the month, offsetting 0.2 increases in both food prices and shelter. Housing-related costs have been one of the most stubborn components of inflation and make up about 1/3 of the weighting in the CPI. So a pullback in the rate of increase is another positive sign. So that's good. We had another good inflation report for June, right? Another good inflation report for June. So that gives us 3 months in a row. And the Fed has been saying we need more data to show us inflation has come down. Well, you got 3 months in a row. You got April, you got May, you got June. Now you go look at the PCE report. You had April and May. And we'll get the June PCE report later this month. We'll get the June one later this month, but I got a funny feeling that's gonna beat expectations as well. So not only do you got the CPI inflation report, but you'll have the PCE inflation report, which is the one the Fed really uses. You're gonna have both of those show inflation coming down for 3 consecutive months. Coupled with, you got the jobs report from last Friday for June that shows unemployment going up. You also got the numbers from GDP showing that the economy is doing what? Contracting. It's shrinking. It's not growing as fast, right? It's not even growing at 2% right now. It's growing at 1.5% basically for the first half of 2024. That's not good. We see unemployment going up 3 months in a row. Now you see 3 months worth of CPI inflation report shows that inflation's coming down. 2 months of PCE, which I think it'll be 3 months when we get the June report at the end of this month. So I think we're set perfect, guys, for the Fed to reduce rates. I really do. I believe we're in a perfect condition for the Fed to start reducing rates. The key is, guys, again, we really do have to get ourselves in a position where we're ready to take advantage of this, though. That's the key. We got to put ourselves in position to be ready to take advantage of this. And again, that's why I say you got to make sure you got income, because your number one tool to build wealth is income. So you got to have income. whether it be from your primary job, whether it be from side hustles, or whether it be from savings that you've been accumulating. Maybe you got some savings that you've been saving up and it's in your money market account. And now you're thinking it's the right time to potentially take some of that money and put it in something to multiply it. Whatever, whether it be from primary income, whether it be from secondary incomes, whether it be from savings, you need to be using all three of those income sources or those money sources and put them in something that can multiply. And I think paper assets give you an opportunity to do that. So the CPI, a broad measure of costs of goods and services, declined 0.1 and putting the 12-month rate at 3%. That's for June, above its lowest level in more than 3 years. Excluding volatile food and energy costs, the so-called CPI, core CPI, increased 0.1 monthly and 3.3 from a year ago. So core came in at 3.3, headline came in at 3 for June. That's pretty good, guys. Right? We beat expectations. That's the key, right? Month over month, declined by 0.1, and headline month over month increased by 0.1 in core, but basically beat expectations though. So this is a win, and I think the stock market looked at it as a win, right? Stock market looked at it as a win because if you go over to the stock market and see what it did, let's take a look. So the S&P 500 trades near record after CPI report shows easing June inflation. I told you. So market goes. Let's take a look. Stocks were little changed after the new data showed the inflation rate fell into its lowest level in more than 3 years in June, bolstering the case for Federal Reserve to cut rates later this year. The S&P hovered just above the flat line along with Dow and the NAS. The consumer price index fell 0.1 last month, bringing the annual inflation rate down to 3%. So that's good. That's very good. Here's what the S&P is doing. 5,659.25. We are headed to 5,700 today, in my opinion. We are headed to 5,700 today, guys. You do understand most analysts in January had this thing 5,500 at the end of the year. Some of them had it less than that. Some of them had like 52, 53. This thing is already almost 5,700 points, and we ain't even out of, we're in the beginning of July. Told you all about treasury yields. Treasury yields fell following the CPI data as traders upped their bets for interest rate cuts. I told you, treasuries fall, stock market goes up. Stock market falls, treasury normally go up. That's how it normally operates, guys. And why? Because now traders, investors are starting to say what? Oh, this is the perfect storm. They got to reduce these rates. And matter of fact, they're not going to reduce them once. They're going to reduce them 3 times. That's what traders are saying now. That's exactly what they're saying. Because of what's happening with the unemployment rate, the labor market, and what's happening with the economy, it's starting to shrink. It's not growing. It's getting smaller. And on top of that, you see inflation coming down. So those 3 things right there, in my opinion, will definitely, in my opinion, give us 3 rate cuts. Now, that don't mean I'm gonna be right. I'm just giving you my opinion. I'm giving you my prediction, but that don't mean I'm gonna be right. With another good CPI print under the belt, the window is open for the Federal Reserve to cut interest rates as early as September, and potentially again in December and November, assuming the inflation data continues to cooperate. Odds of a September rate cut rose greater than 80%. So that means 80% of the market believes there's a rate cut in September. Right? 80%. NVIDIA led chip stocks higher in the pre-market as investors jumped back into the bull market. I keep telling y'all, man, this is a continuous bull market. It's a continuous bull market. Let me read that to you again. NVIDIA led chip stocks higher in the pre-market as investors jumped back into bull market winners following the better than expected inflation reading. Housing related shares showed as Home Depot and D.R. Horton jumped on the hope lower rates would reignite a stalling housing market. Now you got Home Depot and D.R. Horton jump in pre-market. Stock price jumps. Why? People understand when they lower them interest rates, guys, the housing market going to the moon. So if you're in the housing market, if you're trying to buy real estate, listen, it's getting ready to happen. Now, short-term rates, long-term rates lag behind short-term rates, but they still follow indirectly, right? We're not gonna get into all of that, but when short-term rates come down, eventually long-term rates come down. They do. So if we get a 75 basis point cut this year, I believe long-term rates next year will have a 75 basis points cut. That's the way I see it. Y'all might see it differently, but it's coming. It's coming. Can't stop it. Wall Street is coming off a winning session. The S&P added 1% on Wednesday to close above 5,600 for the first time ever. 100 years, however long the S&P been around, it ain't never closed at that. And guess what it's doing right now? Breaking records every day. The question is, are you taking advantage of it and it's record breaking? Or are you just sitting on the sideline? Guys, I hope you're taking advantage of this. I've been telling you this since January, what was going to happen. And it's happening. Not because I'm some expert, because you just got to follow the market. You got to follow the history of the stock market. It's a continuous bull market. You can't stop it. It's going to always go higher, guys. Always. 5,600 is nothing. This thing will be 15,000 by the end of 2030. It'll be 15,000 points by the end of 2030. Next 6 years. Next 5.5 years, to be precise, it will be 15,000 points. Somebody going to remember this and say, yeah, that guy on YouTube, I heard, he said that. He said that the S&P would be 15,000 points. It will be, because it won't stop. It's a continuous bull market. That means you can't stop the upward trajectory. You can slow it down. You can slow it down because you'll have bear market corrections, which slows it down for a period. But you can't stop it. That's my point. You can't stop it. It started at, the S&P 500 started at 0 one time. Now it's 5,600 points. And like I said, by 2030, it'll be 15,000. You can't stop it. Not with what's getting ready to happen in the artificial intelligence industry. You can't stop it. It's going to keep going up, guys. The question is, are you going to be multiplying your wealth along with the greatest companies in America? As the greatest companies in America continue to multiply their wealth, their net worth, their shareholders' net worth, will you be a part of that? Or will you sit this one out on the sideline? You got to answer that question. Wall Street is coming off a winning session. The S&P 500 added 1% on Wednesday to close above 5,600 for the first time, while the NASDAQ composite advanced 1.18% to a record close. The Dow gained 429 points, better than 1.09%. 3 major indexes killing it. They're killing it, guys. They're killing it. Question is, are we taking advantage of that? Are we taking advantage of that? I hope so, guys. Microstrategy rises 5% pre-market after announcing a 10-to-1 split. Now Microstrategy is doing a 10-to-1 split. Microstrategy, the largest corporate holder of Bitcoin, announced a 10-to-1 split on Thursday. The company said the shares will be split into Class A common stock and Class B common stock to make MicroStrategy stock more accessible to investors and employees. Why are they doing that? Why are they doing that, guys? See, you got to know what's behind this stuff. You know why they're doing that? Because they know we're getting ready to go on a run and they want more people to be able to buy their stock to boost their what? Value. See, you know we're getting ready to go on a run. So, hey, before we go on this run, let's go 10-to-1 so more people, more common people, more regular people can avoid MicroStrategy stock because we're getting ready to go on a run. And we want to be able to take everybody along with us because the more people invest in us, the more valuable our company becomes, the more valuable the stock becomes. Just saying, guys, I'm just telling you, these companies, a company like MicroStrategy, largest corporate holder of Bitcoin, they're going 10-to-1. Just saying, you got to kind of know what's behind this stuff, guys. When you see companies like MicroStrategy, just say, well, you know something? We're going to go 10-to-1. We want to be more affordable. They're basically telling you they want more people to buy the stock. They believe they can run the stock price back up all over again. That's why they're doing the 10-to-1. That's why NVIDIA did the 10-to-1. That's why Broadcom doing the 10-to-1. That's why Chipotle did the 50-to-1. They believe this golden age, this next 10 years is a golden age. More millionaires, more billionaires are going to be created in these next 10 years than the history of the world. In these next 10 years, piggybacking artificial intelligence. I'm just telling you, y'all don't have to believe me. Sit on the sideline, don't do nothing. That's on you. But I'm telling you, in this next 10 years, which I call the golden era, this next 10 years, these companies are starting to position themselves. Everybody, Walmart earlier this year, 3-to-1 split. Why? I want to be more accessible. But they say that because they know they want to be lean and mean and have more people have access to them to run them back up again. That makes them wealthier. That makes their market cap better. It does. That's why NVIDIA did it. NVIDIA said, we cannot get where we're at with a $25,000, $3,000 stock price right now. Let's split it, get it back down to $120 a share, and then let's run this thing to $2,000 a share again, $3,000 a share. Guys, that's where you get rich. You get rich right there. Because a lot of people are saying, oh, it's too late for NVIDIA. Oh, it's too late for this company. Oh, it's too late for that company. That's hogwash. These companies know what they're doing. They know what run we're getting ready to go on. The question is, are you going to be a part of it? Are you going to get yourself in position? I hope you do. I hope you do. So here's MicroStrategy's thing going on. Here's what they got going. The move comes amid a low for the price of Bitcoin, which has been stuck in a tight range since about March, but which many investors expect to rebound in the second half of the year. So many people think Bitcoin is going to rebound and pump again, right? Wherever it's at right now, it's still extremely high, but they believe, and here's the propaganda. They're going to tell you that. They're going to tell you that because they want you to invest in Bitcoin and run the price back up. Whether you do or not, that's up to you. If that's part of your financial strategy, go right ahead. It's not part of mine. I'm not giving them one dime in Bitcoin because y'all know how I feel about Bitcoin. It's a pump and dump. Right now, we're still in the pump, but at some point, the dump is coming. The shares rose about 5% in pre-market trading, but are currently about 34% off an all-time high. of 1,999.99 it reached in March of this year. Big stock price. Here's the question. They go 10 to 1. Can you run it back up? That's the key. And they believe they can. They believe they can run it up. So that's the key, man. You know, CPI unexpectedly falls in June. 0.1% in June, month over month, and then 3% year over year. So apologize earlier in the live where I said May. That was a typo on their part. I corrected it. So understand the CPI inflation report for June. Headline, right, came in at 3% year over year. Month over month came in at, it came in at 0.1, right? Core came in at 3.3 year over year, and it came in at, I think it came in at 0. Let me see what it came in month over month for core. That way we can just correct the record so nobody won't have a misunderstanding. It was a typo in this thing and I read it and I didn't catch it till late. So finally did catch it. So I wanted to make sure we made that correction. Let's see, what does it says here? I'm trying to find what core, I think core came in. Core came in at 0. Core came in at 0. I think it came in at 0.1 month over month. Let me see here. Let me just find it. I keep losing my place in my thing here, but let me find it here. Where is core? Yeah, I can't find it. So I think core came in, and I know core I think year over year, core came in at 3.3. And then I believe it came in at 0.1 month over month. So it increased by 0.1 month over month. But it came in for core, it came in at 3.3 year over year. Headline came in at 3.0 year over year and decreased by 0.1 year over year. So make a long story short, the numbers are good. They're favorable, right? So that's the thing you got to hang your hat on. It was reduced. It was reduced. So let's move on and let's talk about these 3 rate cuts. We're going to talk about these 3 rate cuts and then we're going to wrap this thing up. So here we go. Since perhaps February, the Federal Reserve's rate makers have been adamant that data and only data will guide when the central bank starts to cut interest rates. With inflation being sticky at around 3% a year, and the Fed goal is achieving 2% annual inflation. The conventional wisdom was there might be 1, maybe 2 cuts in 2024. A few central bankers have suggested there was no need to cut rates at all. Now there's talk that rate cuts may come sooner rather than later. And there could be as many as 3 this year. 2 rate cuts seem to be the more likely possibility, but 3 is starting to make the most sense, according to 2 investing experts. It's all about risk management. Unemployment is starting to rise slowly, perhaps 0.1% point in each of the last 3 months, he said. And inflation is falling and likely to continue to fall. Bankruptcies, whether business or personal, are rising. And there's nothing that says the Fed should wait to be, there's nothing that says the Fed should wait to be absolutely certain. Inflation is slipping. Stock market gains are increasing, the result of gains for fewer and few stocks. The Fed usually takes dramatic cuts when it's clear the economy is slumping badly. So the economy is starting to slump, guys. And what this expert is saying is The Fed just doesn't have the luxury to wait around. They don't. They really don't have the luxury to continue to wait. Because if they wait too long, they're going to throw the economy into a recession. And nobody wants that. So clearly, you can just reduce the rates. I'm not sure why they don't. I don't know why they keep playing this game, but just reduce the rates. Do not throw the economy into a recession. Don't wait too late. And that's what the Fed has to be careful with. Because if they keep these rates higher for longer and they wait, and all of a sudden they try to, scramble and stop it, it might be too late. Even with the rate reduction, it might be too late. And that's what this guy is saying. He's saying, listen, the writing's on the wall. Stop these games. Just lower the rates. If we got to pay the price, we pay the price. But let's lower the rates. Let's lower the rates. But he noted the Fed has cut rates on at least 2 occasions, 1995 and 2019, when a recession was not unfolding. So there is a precedent that they can just cut rates if they want to. Will they? We'll have to see. We'll see. I think they do 3 times. That's what I think. I think they do. The economy is showing strains, according to a contributor to the street.com and head of Microstrategy at Academy Securities. In a Monday post, he said, or he suggests, the Fed could cut 3 times in 2024 with cuts totaling 75 basis points. So basically 25 basis points, 25 basis points, 25. So 25 in September, 25 in November, 25 in December. And then we roll into 2025 and get another 6 rate cuts. Could be. We'll see. I hope so. I hope we get the 3 this year, because that will send NVIDIA stock to $200 a share. That's going to send the S&P to, who knows, 63, 65. And they go to, there's the net worth. Because if NVIDIA goes to $200 a share, which I believe they will this year, I believe NVIDIA will go to 200 this year. Crazy net worth gain, right? If it goes to $200 a share, crazy net worth gain, right? So anybody that doesn't have that on their short list should consider it. The June jobs report released on July 5th highlighted this expert's concern. The domestic jobs report was fine on the surface. That said, he wrote, the jobs market is no longer robust and certainly not one-sided in terms of job seekers like it was for much of 2023. And all he means there is, in 2023, you had like 2-3 jobs for every qualified candidate. You don't have that anymore. You have about 1 job for every qualified candidate now, based on the current numbers. And you got unemployment on the move upwards. So that may even further deteriorate, is what he's saying. You just don't have the luxury like you had in 23, where you had 3 jobs for every qualified candidate. You don't have that anymore. Right now, you barely have 1 job for every candidate. And on top of that, wages are starting to slip. Then using the Taylor rule utility to argue the Fed funds rate is too high. This is a calculator on the Federal Reserve Bank of Atlanta website that lets users calculate the federal funds rate using different scenarios. When he plugs in some assumptions, he came up with calculations of 4.61, 3.91, 3.61. All are lower than the current Fed funds rate. We all know, well, we don't, I'm gonna say we all know, but if there's a growing number of people out there that believe 5.5% is too high. And that what we're currently experiencing in our economy, labor market, inflation, dictates a lower Fed funds rate. Hopefully the Fed will see it that way too. Now, like I told you earlier, Tuesday, when he was meeting with the Senate Banking Committee, kind of mentioned that. He kind of said that. Well, we're open to it. Just need more data. How much more data do you need, Chair Powell? You got 3 inflation reports in a row. You got these jobs reports. I don't know what else. What else do you need? You got the GDP numbers. I don't know. I don't know what else you need, man. I don't know. We got to figure out something because we got to figure out something. But these analysts are not alone. Many note rising stress levels in the economy. Here are 4 signals. Bankruptcies were up 28% this year through April, according to the American Bankruptcy Institute data. Personal filings are up 28%. Small business filings are up 40%. That's this year. That's not good, guys. That's not good. Payroll growth is slowing. Remember I said earlier, wages are starting to come down. Payroll growth is slowing, according to most recent jobs report from the Bureau of Labor Statistics. So now you got bankruptcies up, both personal and business. Corporate bankruptcies are up 28%. Personal bankruptcy filings are up 28%. Small business bankruptcy filings are up 40% this year. That's not good. Payroll growth is slowing. That means wages are coming down or not going up. Wages are not going up as fast as they were a year ago. Home sales have been flat to falling all year because of mortgage rates, have not been able to drop definitively lower below 7%. Home sales declined in April. Home sales declined in March, April, and May of this year, 3 months in a row. And indications are that June saw a pullback as well. So now you got 4 months in a row. March, April, May, June, where home sales, transactions are falling. Keep pointing back to the economy, guys. It's in trouble. Fed can solve this by reducing rates. Consumers are not buying Big Macs or Whoppers as readily as before. That's forced McDonald's and Wendy's and other fast food chains to promote value meals again. These worries are starting to weigh on stocks. The major averages produced okay gains last week led by tech and related stocks. The other 8 sectors of the S&P were flat to lower on the week. Stocks are basically flat on Monday, though the S&P and the Nas closed at record highs. And that's because of tech. That's because of tech. All of this right now in the stock market is because of tech. It's because of tech. It's because of tech. That's where you see all the FOMO. That's where you see all the optimism is in tech. Them other industries, you don't see that. You don't see it. NVIDIA is falling. NVIDIA is off by $6.94 today. It's on sale. So for some of you out there who are looking to catch this thing on sale, this is a good day to catch it. See, this is what I'm trying to tell y'all, guys. This stock market thing, forces that are behind the stock market, a lot of us don't know because it doesn't make any sense. You got the NASDAQ, okay. You got the S&P, fine. You got Tesla, fine. You got other stocks, fine. But yet and still, you got NVIDIA falling. Why? What's the market behavior? That's what it is. See, what happens is when this thing runs up like it does yesterday, it runs up to whatever it ran up to. Last time I checked, I believe it was 135. It ran up to 135. Now it's running itself back down to 127.93. It's just manipulation, right? It's people buying and selling, shorting, all kind of stuff. It has nothing to do with the company. There is no business performance problems with this company. It's all market behavior. They're using this stock like a piggy bank, and that's just what's happening. But I'm going to tell you what's going to happen. When this Q2 numbers come out, all that's going to stop. All that's going to stop. So for right now, they're using it as a piggy bank, right? Buy heavy one day, sell heavy the next. That's what's happening. But I love it because let it keep falling. I'm just going to buy the dip. I told you I got another 2,700 shares to buy before August, before the end of August when they come out with the Q2 numbers. I got to be up to at least I want to be up to actually 10,000 shares before the Q2 earnings come out. So I got a lot more shares to buy because I only got 4,800 right now. So I got another, 5,200 to buy. So continue to drop. I'm just going to swoop in and buy the dip. That's all I'm going to do. Right now it's at 128. It's down almost $7 a share. If it gets down in the 120s, I'm buying today. So just letting you know, if it get down to in the 120s, under 120, 120s, under 120, I'm buying a big chunk of it today. So I'm going to keep watching it and let's see what happens. I love when it goes on sale because I know what's coming for this stock over the next couple of years. The more I can buy, guys, at that 120, the more beautiful it's going to be on when it goes. So right now it's 128, could be a bargain for some of y'all. It's not a bargain for me, not in a lump sum buy the dip bargain. I need to be under the 120 mark for me. 120, I'm in the 120. But if I'm just dollar cost averaging in, I buy it at this price all day. But if I'm lump summing, I'm gonna wait for 120. But dollar cost average, just buy it right where it's at all day long. It's a discount. It's a discount. So definitely do that. Let's take a look at Tesla. Another one of my absolute favorites. Let's see what Tesla's doing. Ooh, Tesla down to 259. It's dropping. So we'll see. Y'all know how I feel about Tesla. I've already made my money in Tesla. I mean, I gotta admit, I already sold my stock in Tesla already and made a nice little profit. So I'll wait for Tesla to go back down to 150, 160, something like that again. It'll go back down. When it does, I'll buy it again. And then I'll let it run up another $100, I don't know, a year or two, whatever it is. And then I'll sell it again. So right now it's 159. Tesla's a hard one. Tesla's a hard one because they haven't been consistent enough to be able to say, well, okay, Tesla's a hard one. Do I believe it will stick at this price at 259, 260? No, I don't think so. That's why, I think it will have a run, but I think it's predicated on the robo-taxi business. And also predicated on interest rates coming down. So let's face it, guys, when interest rates come down, more people buy cars. With interest rates as high as they are, fewer people buy cars. So if interest rates come down, I think you'll see Tesla jump even more because interest rates will be down. They can deliver more cars. But right now, I don't know. I don't know. I don't know. I'm gonna have to keep an eye on Tesla, but I made some money in it, so I'm good. I'm good with Tesla right now, and I'm gonna be buying more at the right time. So let's take a look at let's see what Apple's up to. Magnificent Seven company. So let's see what Apple is up to. What the stock price is up to today. Let's see. 226, it's down too. So you see things are down. I mean, you see Apple down, Tesla's down, Nvidia's down. Let's see what Microsoft is doing. Let's see what Microsoft is doing. Microsoft is down by more than 30. Guys, this is a day right here for you to go shopping. For some of y'all, this is a perfect opportunity to go shopping, guys. All of your major Magnificent Seven companies so far are down. I mean, you got Microsoft down by almost $14 a share, guys. This is a buying opportunity for some of us. Let's take a look at Meta. Meta's down by $20 a share right now, guys. What a buying opportunity. Meta's down by $20 a share. Take a look at Amazon. Amazon's down by $5.39 a share. Let's take a look at Alphabet. Alphabet's down by $4.96. So you got Apple down, you got Microsoft down almost $20 a share. That's a bargain. You got Meta down. Wow, that's interesting. Tech is not having a good day. No, Meta's down by $20 a share. That's who's down by $20 a share is Meta. So that's a bargain. Microsoft's a bargain. Oh yeah, I gotta get some Magnificent Seven today. Everything's down. Apple, Microsoft, Meta, Amazon, Alphabet, Nvidia, Tesla. All 7 of them are down today, guys. That is a bargain. That's a bargain for me. I got to get some of this today. Heck yeah. I'm getting ready to go I'm getting ready to go buy some right now as soon as I get off this call. Oh, absolutely. What the world is going on? Let's see what's happening on the S&P. Oh yeah, S&P down by $47, guys. This is a day to go shopping. What is the Nas doing? NASDAQ down by $344. Guys, I'm telling you, this is a day to go shopping. This is a buy the dip day. If you got some extra money and you want to get into some good assets, you got the Magnificent Seven. I'm getting ready to buy some right now. As soon as I get out of here, I'm going to execute me something because right now they're on sale big time. Big time on sale. Don't know how long they're going to be on sale. I mean, Meta is really on sale. Meta is down by $20 a share, guys. You know that ain't gonna last long. Wow. Yeah, Meta's down by $20 a share. Let's see here again. Now it's down by $21 a share. It's down to by almost 4%, guys. That's easy money because you know it ain't gonna last. You know it's not gonna last. So all of this is easy money. $21 a share on Meta, easy money. Easy money. Let's see let me see what Tesla's down. Tesla's down by 50. Tesla's down to 248. Tesla's down to 248, basically $15 a share off. I'm glad I sold mine yesterday. I sold mine yesterday, so I'm good. I made my money and got up out of that. What else? Nvidia's down by almost $7 a share, $6.82 to be precise. What's Microsoft again? Microsoft is down by $13.42. So right now, it looks like Nvidia, not Nvidia, but Meta is the winner right now. Meta is the winner right now. Yeah, Meta is down over $21 a share. So if someone's looking for a quick come up, Meta is your player right now. If anybody looking for a quick come up, Meta is the player because you know this won't last. Tomorrow it'll be back up. Monday, Tuesday next week it'll be back up and higher. So right now it's trading at 513. Somebody can make some money. I'm gonna make some because as soon as I get off of here, I'm going into the app and I'm gonna make me some trades. Yeah, so yeah. Wow. 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 Guys, don't go to sleep on this, man. It looks like tech is on sale today. Let's see what Apple's doing. Again, I want to see how low Apple has dropped. See, Apple ain't really dropped that much. Your main one right now is Meta. Meta is the one that presents a great opportunity, guys. I mean, and you got to get on it though, because it's already starting to. Right now it's $19.95, so it's starting to. Wow. Yeah, you got everything down. You know, everything's down. Of course, the Dow isn't. So looks like other industries are doing okay. Looks like it's just tech. Yeah, looks like it's just tech. Because it looked like the Dow is doing fine. The Dow is actually in the green. It's up. So, yeah. Okay, let's look at Microsoft again. Microsoft is still $13.29, down by almost $14. So Microsoft, Meta are two basically layups. Now, how long this will last, guys, I don't know. So don't, I'm just saying, I'm not your financial advisor. I can't tell you what to do. But I'm just saying, if you look, see, Tesla's already rebounding a little bit. They were down to 248. They're back up to 253. So I don't think this will last all day. So this might be, you can get in there and hit the dip and get yourself in a position to make some gains. But I told you on the video, it has to come down more for me. I need to be in the 120 range on the video. And I don't know if it'll get there today because the low is 127. It may not get there today, but if it does, I'm all in. I am all in if it gets there today. So I'm gonna go get some Meta. I'm gonna go grab some of this. I'm gonna go grab some of the Magnificent Seven altogether because all of them are down. And what an opportunity when you can buy all the Magnificent Seven in the red. I mean, come on. And just a nice little, yeah. So I think that's what I'm gonna go ahead and do. Wow, that's interesting. That is interesting. What's going on with stocks today? What's causing this? That's what, okay. So they're saying that the investors are rotating out. And that makes sense. It says S&P 500 falls from record as investors rotate out of 2024 tech winners. So again, taking profits. That's what it is today, guys. And I ain't mad at them. When you keep having run-ups like this, guys, you keep having run-ups, take your profits. And this is what these big boy investors are doing today. They're taking profits. You got the S&P then fell down to 55.90. Small cap benchmark Russell 200 index gained 3.3 as investors hope for a Federal Reserve rate cut in September. Housing related shares of Home Depot, D.R. Horton, I told you guys about that. Yeah, they're just rotating out. According to this, what I'm looking at here, S&P retreated from a record as investors rotated out of the biggest technology winners of the year, like NVIDIA, Microsoft, Meta. What I just told you, Meta's down almost $20 a share. Here's the thing though, they'll rotate back in, guys. They're rotating out now, but they'll rotate back in. And that's where you got to get the dip. So when they rotate back in and Meta goes up to $550 a share as opposed to $515, you just captured a bunch of money. You just captured $35 a share, just like that when they rotate back in. They're rotating out right now, but they will rotate back in. Come on, guys. I'm just saying. The S&P 500 retreated from a record as investors rotate out of big technology winners of the year, NVIDIA, Microsoft, Meta. The catalyst for the move was the lowest CPI reading in more than 3 years, which sent rates lower and investors into small caps and housing related shares. So they're rotating out. going into small cap stocks and going into housing related shares. Why? Because if interest rates come down, guess what's going to happen? Housing market going crazy. And if interest rates come down, guess what small cap companies can do again? They can borrow money to grow to mid cap stocks, to large cap stocks. They can borrow money again. That's why they're rotating into small cap. The S&P fell 0.4%, retreating from a record it touched earlier in the session. The NASDAQ pulled back nearly 2% after also hitting a new record earlier in the trading day. The Dow added 105, which is up 165% on the year, lost nearly 3%. Oh, Nvidia is up almost 165% on the year and lost 3% today. So there you go. And that's why they're saying the small cap benchmark Russell 2000, which is small caps, gained 3.3 as investors hoped for Federal Reserve rate cut in September and economic soft landing following the inflation data. So they come out there. So what do? They've been rotating into these big tech companies, right? They get this good news. And initially, stocks go higher. Then investors say, okay, there may be opportunities. We've won here. Let's rotate out of these guys and go somewhere else where we can take advantage of another rise. Housing related stocks, small caps. And that's what they're doing. So that's why things are, because I was thinking to myself, what in the world is going on? But now it makes sense. Let's take our profits. We've done well over the last 2 weeks, last month in the big boy tech stocks. Let's move, rotate out of here, take our profits, and let's go find another place where we can have a jump. And that's what I think is happening right now. But that presents opportunity for us though, right guys? That gives us opportunity. When we see that, that gives us opportunity. Now I got the opportunity to go buy Meta at a deep discount today, $20 per share discount. I can go buy Meta when you know it's temporary. Meta will be trading at $550 a share in the next couple of weeks, probably. You just made basically $35 a share. It's trading at about $515, guys. So now we know why the market is doing what the market is doing. Investors are rotating out of big tech into small cap and housing market related stocks. That makes sense. Tesla back down to $248 a share, guys. $14.33 off today, right? Share price is off by $14.33. That's Tesla. Let's look at the rest of the Mag 7 and then we're going to get out of here. Nvidia still down today. Stock price down $6.73. Not a buy for me just yet, not a lump sum buy. Obviously, I'm dollar cost averaging in, but it's not a lump sum buy for me yet until it gets around $120 a share. When it does, if it does, I'm all in. I'm going to pick up another 2,500 shares. If it gets to 120 a share, I'm going to pick up another 2,500 shares. I'm just waiting for it to get to $120 a share or less. Not there yet. Keep my eye on it through the day though. It's not there yet, but that doesn't mean you can't pick it up at 128 because that's still a bargain. If you know what I know, you'll know it's still a bargain. Meta, $19.19 on sale. Stock price is $19.19 on sale right now. That's Meta. Guys, if you're looking to listen, if you're looking to make something happen, guys, you got to make it happen. Meta's $20 a share on sale today. It will not stay there. If you get down to the description box, click on the Moomoo link. Now, I know for y'all, if you got a brokerage account, if you already got your Moomoo account, you got money loaded in there, think about this one. For those that don't and saying, well, golly, I can't take advantage of opportunity. I don't got no brokerage account. Get down to the description box. Click on the Moomoo link. Open up the Moomoo account. Put some money in it. They're going to give you up to 15 free stocks. 5 free stocks if you put $100 in your new Moomoo brokerage account. 15 free stocks if you put $1,000 in your Moomoo brokerage account. Now you're in position. You can be taking advantage of Meta right now. You should be buying Meta right now while it's at a $20 per share discount. But if you don't have a brokerage account, you don't know how to use it, you're not in position, you can't build wealth. You should be in position. For those of you that are in position, go take a look at Meta. I can't tell you what to buy, guys. Go take a look at Meta. It's $20 a share on sale. Go take a look at Microsoft. Let's take a look at Microsoft again. It's $12.86 on sale per share off of its per share price. It's on sale. So you got Meta and you got Microsoft. Those are the two big sales right now. And Tesla. Tesla's a big sale too. Those are your 3 big sales right now in the Mag 7. If you're looking for Mag 7 sales, if you want to go shopping, you're looking for Mag 7 sales. You got 3 of them right there. Okay, guys, what are you doing? This stupid thing. If you're looking for Mag 7, I'm telling you guys, those are the 3 that are on sale right now. They got the heaviest sales. Yeah. Tesla's still dropping. 246.82 right now, guys. It is $16.44 on sale. It's $17.07 on sale. It's still dropping. It's at it's at $18.16 on sale. It continues to drop. It continues to drop. Tesla is dropping very, very rapidly. It's 7% on sale. $18.16 on sale right now. Anybody that's looking to build some wealth, guys, please go take a look. $244.51. It's almost $19 on sale right now, Tesla. Almost $19 on sale. Meta. Meta is $19.56 on sale. Meta. So your 2 big opportunities in the Mag 7 today, guys, are Tesla and Meta. Those are your 2 big opportunities right now where you can get a heavy discount. Heavy discount. But that's temporary. It won't last. At least for Meta, it won't. I don't know about Tesla. Meta, that won't last. Meta will be coming back. But those are your 2 biggest ones right now on sale. God, dog it. Why don't you keep doing that? Apple, $6.17 on sale. Not anything major. Let's look at Alphabet. $4.94 on sale. Nothing major. No major sale there. Let's take a look at Amazon again. Let's see if Amazon represents anything appetizing. Let's see. Not really. $5 off on Amazon. Nothing real appetizing there. Really, your big heavyweights are going to be Meta, Tesla, and Microsoft. Those are your 3 opportunities right there, guys, in the Mag 7. If you want to make some net worth today, you can make some net worth, in my opinion, in those 3. I'm not your financial advisor. I'm not trying to tell you what to do. I'm just giving you some information here that you can then take and execute. That's all I'm trying to do, is give you some execution tips. I'm trying to show you something that you can make some money in. Again, Microsoft, $12.61 on sale. Huge fire sale today, guys. Huge fire sale in the Mag 7. The Mag 7 is having a fire sale. They're having a BOGO. They're having a year-end clearance. Just saying. If you like that kind of thing, you got 3 of the Magnificent 7 year-end clearance sale. Why not go check them out, guys? All right, well, that's it for me, man. I'm gonna end it there. I've given you guys all I can give you. Hopefully somebody out there heard me. Hopefully somebody executing. Hopefully somebody gonna take advantage of this semi-annual sale that's going on right now in the Mag 7. It's a semi-annual sale in the Mag 7, guys. If you've been thinking to yourself, you want to get into NVIDIA, listen, 128 ain't a bad price. 120 is better, but 128 ain't bad. Not when you know what I know or what I think I know. I don't have no crystal ball. I'm no expert. I'm just making predictions. Think about it. If I can buy it at 128 and that stock price goes to $200 a share by end of the year, you're going to look like a pretty smart investor. Just saying, guys. And that's how you got to think. Got to think big. Now, don't get me wrong. It could not get to $200 a share. It may stay at 128. I don't know. But the numbers tell me it won't. The numbers tell me it's going to go. And when it goes, you may not see it at 128 again. So all I'm telling you is think long and hard about what you want to do and go ahead and make it happen. If you got a brokerage account, go make it happen. If you don't have a brokerage account, get down in that description box and click on that Moomoo link. Open up your Moomoo account today, guys. Get yourself up to 15 free stocks. If you don't know how to use the Moomoo app, no big deal. All you got to do is email me through my website, www.richardfain.net. Second link down in the description box. Shoot me an email and say, hey, Richard, I opened my Moomoo account today. I funded it today. Send me those tutorial videos so I can learn how to use this brokerage app. So the next time you have some semi-annual clearance items, I'm ready to take advantage of them. Right now, I can't take advantage of these sale items. I don't know how to use a brokerage account. I don't have one. I don't know how to use it. I ain't got no money in it. I can't take advantage of any of this. Don't. But that goes back to putting yourself in position, right? Right? See, me, all I'm going to do is just get right here on the laptop. As soon as I click this thing off, I'm going to get on the laptop and I'm going to go buy me some of these semi-annual sales. I'm going to go get some Meta. I'm definitely going to go get Meta and Microsoft. They on sale, man. Tesla, I'm not buying any Tesla until it get down to $150 a share, which it will be. It will get down there at some point in the next 6 months. And then I'll buy a bunch of it again. That's what I'm going to do with Tesla until they come out with the robo-taxi stuff. Till they come out with the robo-taxi stuff, it ain't gonna do nothing major. Kathy Wood already said that. Kathy Wood said the only way it gets to $2,600 a share, they gotta have a robo-taxi in place. And it has to work. Right now, I don't see that, so I'm gonna wait until they get the robo-taxi stuff almost close. But until then, when it drops down to 150 again, 160 again, which it will, I'll buy a bunch of it and hold it till whenever it goes back up to 250 again. Could be a month, could be a year, but I'll hold it until it does, and then I'll sell it again like I did the last time. So all I'm telling you guys is you got to have a strategy. You got to have a strategy that works for you, not for nobody else but you. But you got to be in position. You got to be in place. So get down in that description box. 18 to 80 years old, if you want to build wealth, if you want to increase your net worth, get down in that description box, click on the Moomoo link, open up the Moomoo account, put your money in there. $100, you get 5 free stocks. $1,000, you get 15 free stocks. And then send me an email through my website and let me know you open that Moomoo brokerage account, but you need some training. You need some tutorial videos to show you how to use it. I'm going to send those to you. And I'm going to send to you my wealth transfer blueprint 1.0, 2.0, outlining all the investments that I buy. So if you want to copy my plan, you can, or you make your own plan. That's up to you, right? But at least you're in position. And then the next time I show you items that are on clearance, you can be in position. A lot of y'all ain't in position today to take advantage of these clearance items. They won't be on clearance for long. They might be on clearance for a day or two, maybe tomorrow, but by next week, they ain't gonna be on clearance again, guys. They're gonna be went back up to full price. They're not gonna be on sale next week. They'll be on sale today and tomorrow, but next week, they will not be on sale, guys. I'm gonna go back through them next week and remind y'all, they're not going to be on sale next week. I'm telling you now. So my recommendation is get your brokerage account. Ooh, Meta, $20.04 on sale, guys. That's Meta. Let's see what Microsoft is doing. And then we're going to end the call. Let's see what Microsoft is doing. $13.30. Let's see what Tesla's doing. Tesla's probably down to $4.30 right now. Y'all know when Tesla fall, it falls fast. Let's see what Tesla doing. Yep, down to $244. I told you, $18. Listen, man, Tesla on sale, $244 a share. Some people believe Tesla will go to $300. I don't know if I believe that, but right now it's on sale. So those are your three big magnificent sevens still on sale. I got out of Tesla yesterday, so I'm not stressing over it. I got out of my position yesterday and made my little money, and I'm gonna wait till the next 150 drop, and then I'll buy Tesla again. But Microsoft and Meta, those are two right there, guys. That I just believe those are can't miss, in my opinion. But that's just my opinion. I'm not your financial advisor. I'm not a financial advisor. I don't claim to be a financial advisor. I'm just a guy on YouTube that make YouTube videos about making money. That's all I am. And I got 30 years of doing it. Just want to throw that in. Got 30 years. Just want to throw that in. Just so I can get a little bit of, a little bit of opinion. My opinion kind of matters a little bit. And of course, I've been telling y'all from January to now exactly what was going to happen. And it's happened. So just saying, just wanted to make y'all aware of that. Some of y'all know that. Some of y'all don't because y'all are new. And y'all might be like, who is this guy? Where did he come from? No, I've been saying this since January. Everything that's happening right now, I've been saying since January in the stock market. Been saying since January. Told y'all the S&P was going to the moon. It did. It still is. Told you NVIDIA was going to the moon. It did. It still is. Told you the Mag 7 was going to the moon. It did. It still is. Told you SPLG, FTEC was going to the moon. They did. All of my investments are going to the moon. Except one, Tesla. It's starting to go, it's coming back down to earth. It was at the moon, but it is back down to earth. But that's okay. I'm still a Tesla guy, and I'm going to still buy Tesla as much as I can when I can through dollar cost averaging, through the Magnificent Seven. I'm just not going to buy a big lump sum of it right now until it gets back down to $150 a share. When it hits $150, which is my target buy price for my lump sum investing, then I will buy more Tesla. If NVIDIA gets down to $120 a share, that is my target buy price for my lump sum investing to buy more of that. Or when I get closer to August 28th, I'll see what the stock price is and how I feel that it will jump. And then I may even just buy higher, maybe 135, maybe 140, I'll buy it because it's going to go higher once they come out with the Q2 numbers. It's going higher, guys. It's going higher. So I'll make a determination on that at that point. So appreciate y'all, man. I thank you for rocking with me. My time is up. You guys have the rest of a wonderful, what's today? Thursday. I'm picking up something really, really special today. And if you guys ain't follow me on Instagram, you want to get over to Instagram and follow me on Instagram, because when I get it, when I pick it up today, I'm going to do an Instagram reel this afternoon on something really, really, really special I'm getting ready to pick up. And guys, it's special. So if you want to know what that is, you need to follow me on Instagram. Get down to the description box. Click on that Richard Fain Millionaire Mentor Instagram link. I'm picking up something really, really special, guys. And I'm only going to put it on Instagram first. And then later on, I may drop it on the YouTube channel. But I'm putting it on Instagram today. So if you're curious to know what that's going to be, check out my Instagram, guys. Follow me on Instagram so you know what it is. It's a big boy. It's a big boy toy. It's a big boy toy. So yeah, I'm excited about it, and I'm excited to share it with you guys, but it's going to hit Instagram first. So if you want to know what that is, follow me on Instagram. Stay tuned in on Instagram, And then I want you to drop me a DM once I post it. I want you to drop me a DM and tell me if you like it or not. It's a big boy toy, but I want you guys to tell me if you like it or not. And then I'll do a video and post it maybe next week to the YouTube channel. So that's it, man. I'm excited about life. I'm excited about building this wealth. I'm excited about bringing some of y'all with me. I'm excited about the private mentorship club over through my website, through the Patreon site. It's growing. It's doing great. I'm just excited about life, man. And I hope you are too. I hope you guys come back tonight. I may or may not do a live stream tonight. It depends on this toy I'm picking up and how long I got to get tied up to do that. If I get back and I feel up to it, I probably will get on about 8 o'clock tonight on a live stream for a little bit. Maybe not. Maybe I will. Y'all stay tuned to the channel. That's why I say you got to hit the post notification bell so that you're notified every time I upload or every time I come on live. You'll know. They'll ping you. So be part of that. But yeah, appreciate y'all, man. Like I said, get down there and support them links down in the description box. Support that Weeble. Well, to my Weeble. Support that Moomoo link. Oh, I do got a Weeble link down there too. I got two of them down. I got Moomoo and I got Weeble down there. So support both of them. I mean, hey, more than one brokerage account is fine, guys. I don't know why. Oh, go away. I use Cash App. Okay, use Cash App, but you can use these too. Use them for different things. It's okay. Golly, I got 4 brokerage accounts. Probably they'll have 5 here soon. Who cares? I use them all. The goal is to build wealth. If I'm gonna get free stock, you're gonna give me something for free and I can use a good brokerage app, I use it. So get down in the description box if you want to. Hit the Moomoo link and the Weeble link if you want to. Both of them are wonderful brokerage accounts. I'm just using Moomoo as my personal one, as my primary, I meant to say, my primary. So, but you're gonna get free stocks. Go get free stocks from the Moomoo brokerage app. They're gonna give you up to 15 free stocks. 5 free stocks when you put $100 in there, 15 free stocks when you put $1,000 in. And then you can send me the email and I'll send you the Moomoo tutorial videos and my wealth transfer blueprint 1.0, 2.0. And then while you're at the website, join the private mentorship club. Go join 700 folks just like you who are trying to get to that pot of gold at the end of the rainbow. I love it over there. So you'll love it too. Just get in over there and dive in and get yourself immersed in it. That's the only way you get the best out of it. You go over there, be a little wallflower, you ain't gonna get nothing out of it. You gotta get over there and just immerse yourself in it with everybody else. Start asking questions, be inquisitive, ask questions, and boom, all of a sudden you're immersed in it, and then you'll be like, whoa, this is a great community, I love this. That's what you gotta do though. You can't be a wallflower, you ain't gonna get nothing out of it. You're gonna quit. If you're a wallflower, you're gonna just quit. Because it ain't gonna make sense to you. You ain't gonna find no value in it because you're not putting any value in it. So you get out of it what you put into it is what I'm saying, right? All right, man, I'm out of here. Thoughts become things. See it in your mind, hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'm gonna catch you guys on the next one. Peace.